Hi everyone and welcome to my morning report charts analysis videos on Friday the 16th of February with me, which is pro-market analyst at Hantec Markets. We've got dollar weakness. That seems to be now a resumption of the trend lower that we'd had throughout December and January. That rebound that we saw in early Feb seems to have now been unwound, and the dollar index is now below that 88.40 level that it had in late January, and that just continues to move lower. That I think is going to ultimately move back towards sort of 84, maybe 82 area on dollar index, sort of a series of supports around that sort of area, which is still considerable downside further to go. We've also got treasury yields which are rising. Rising treasury yields don't seem to be supporting the dollar at the moment. And that is interesting, but certainly seems as though confidence is sort of returning to the markets, and a lack of fear is, or return to sort of, I hazard to say, sort of more normalised levels of volatility, as the S&P 500 has rebounded quite strongly, and that is certainly helping to drive European markets higher today. See that across the board, strong gains on European indices, but the dollar is weaker across the board on Forex, and that is generally speaking an ongoing theme now, I think, to watch out for. So what we do see is also commodity prices gaining on the back of that. Gold is higher, you've got the oil prices which are higher as well, and it just seems as though the markets are sort of regaining a bit of poise as this dollar starts to weaken again. So this is generally what we're seeing today. Now we've got UK retail sales as an initial key data point to watch out for in the European session. Expected to see ex-fuel retail sales improving actually to 2.5% on the year-on-year, with a jump of 0.6% on the month. And then we're looking at US housing starts. 1.23, so it's slightly higher than last month, and building permits as well. Housing starts and building permits are expected to improve. So yeah, that's although building permits, in line with last month. And then we're looking at the Michigan sentiment this afternoon. Preliminary reading of Michigan sentiment, 95.5. Now that is the prelim reading of last month. 94.4 was then revised higher to 95.7. So that's basically around where we saw last month on the prelim Michigan sentiment. So lots to think about today as we sort of come towards the weekend. But my chart today is the dollar CAD. Now what we have seen is the oil price. We just get the oil price back up. Oil price rallying in the last sort of couple of sessions, and that has continued today. And generally speaking, with the dollar weakness as well, what does that add up to? That adds up to dollar CAD falling away. We've had some bearish candles coming in, but look at this pivot. This old pivot around 126.50 coming in as basis of resistance. Old support becomes new resistance in the rally. So falling away, bearish engulfing candle on Wednesday, negative candle yesterday, negative candle falling today. We've got the RSI falling back from 60, we've got the MACD lines failing at neutral, we've got the stochastics accelerating lower. This looks to be a market that's pulling back again. Now what we have is a minor sort of pivot around 2370. That could easily be seen in the coming days, and you can see here on the hourly chart where the market has rolled over. 25.50 basis of resistance, old support becomes a new resistance, failing at 25.37 yesterday. Momentum indicators failing at 50 on the RSI, and MACD lines failing underneath neutral. Rallies are being used as a chance to sell now. So look out for the opportunities to sell, I would say, on dollar CAD, and it certainly looks as though it's turning more corrective as this dollar weakening trend has resumed. So I wish you good luck in your trading today, and I will speak to you later.